Time once again to check on the latest earnings trends with Zacks Director of Equity Research, Dirk Van Dyke. The books are officially closed on Q1 now, Dirk. Give us a quick bottom line on what happened there.
Well, much better than the fourth quarter, but much worse than the first quarter of '08. Relative to the first quarter of '08, we were down 31.5% year over year on a total net income basis, down 16% on a median EPS basis. But you had positive surprises outnumbering disappointments by over 2 to 1, and some pretty big surprises with a median surprise of over 4%, which is above normal.
So both a bull and a bear case to be made.
Yes, very much so. So sort of in the bad but not quite as bad as expected category. And in response, we have seen the analysts start to pick up their pace of estimate increases and slow their pace of cuts.
Now, these analysts looking forward, how are they going to keep themselves from getting, again, too optimistic?
Hard to say. I mean, if we're looking at the second quarter, that doesn't seem to be an immediate concern. We're looking on a year-over-year basis at the earnings being down 36%. One other thing on the first quarter I would point out, I've pointed out before, that relative to the fourth quarter, almost all of that improvement is due to the financial sector with some very poor quality earnings. If you strip out the financial sector, we're down about 14% on a sequential quarter basis, and the quality of the earnings at the financials was just atrocious.
Let's take a look at the GM picture here. What happens now with GM, now that they are officially in bankruptcy? Do they just stop reporting earnings altogether?
Well, they're going to be stripped out of the S&P 500.
Right.
The data that we have right now includes GM. I think probably next week's will not. That is going to put some fairly serious distortions into the data. I mean, GM lost a lot of money last year, and as you know, when we report on the S&P 500, it is always as of the current construction of the S&P 500. So last year's earnings are going to go up, even though last year's long gone.
Right.
And, actually so will this year's. The net effect, however, should probably be that there will be a less positive or less negative year-over-year growth, but, we've got to figure that one.
But that's on the big picture. What about GM in particular? When officially are they supposed to stop reporting corporate earnings for that company?
I think they will probably still be producing those earnings reports
for a while.
It's not till you come out of bankruptcy that the shareholders officially get wiped out.
I see.
And so there's still that process. While they're still technically a publicly traded stock, although it may go to the bulletin board or something, that they are still required to. So
we no longer have the big three in the auto sector. We have the big one left standing.
Yeah, the last of the Mohicans. Ford.
And so that is going to skew, as you said a moment ago, the picture for that sector.
Yeah, I mean, it really wasn't only the big two because Chrysler had become a private company a long time ago. First being absorbed into Mercedes and then being taken over by the three-headed dog. It's, and I mean, in terms of the market cap of the market, it's insignificant. I mean, they have declined to such an extent already that they don't have that much of a direct impact. However, you're still looking at a big increase in unemployment. Even with this plan to prepackage bankruptcy, the plans are for another 16,000 jobs, another 14 plants, I believe it is, scheduled to be closed. That's going to absolutely devastate the communities where those plants exist. It's going to put a lot of downward pressure on the suppliers. The got over 2,000 dealers that are going out of business.
Big economic impact.
A huge economic impact. That I think a lot of the green shoots people, are kind of downplaying. But it's got me very nervous that this could, you've got the stimulus kicking in and it's helping.
Right.
But this is a big kick in the teeth.
All right, let's get back to earnings on the aggregate. Going into Q2 here, are more companies going to be loosening up with their guidance? Up to now, they've been kind of tight-lipped, a lot of them.
I think they're still going to be tight-lipped about what they have to say. I mean, they'll probably get back to guidance when there's a lot more sunny news to report. But right now, everybody's sort of saying, well, we're going to change our policy. We're not going to tell you anything. So
what are you looking forward to Q2? For Q2, or are you not looking forward to more?
Well, I mean, we're looking at down 36% on a total net income basis, down 19% on a median net income basis. Now, those are pretty low figures, so we may be setting up again for a very low hurdle to get over.
Are you willing to use the word stability yet when it comes to corporate earnings?
Yeah, I think stability, but not going down, at least now we're probably more talking sequentially. Mm-hmm. Still 36% down year over year is down pretty hard, though is not the same thing as going up. Now, when we get to the fourth quarter, we start having very easy comparisons. And, anytime you're looking at a year over year growth rate, you got to be looking not only at what's happening today, but what was going on a year ago.
Right. All right, get on over to Zacks.com. Check out Dirk's most recent earnings commentary in text form. Just scroll down the page till you get to Dirk's picture. Click on the headline right next to it, and it'll take you to all of the pertinent information for the big earnings picture on the aggregate, as we say in the business. With Dirk Van Dyke, I'm Terry Ruffalo.